right, so you see my screen, Jeanette?
Yes, little bird, I see your screen.
PowerPoint.
Take it
Okay.
away. You have 1 hour.
Okay. 2:11 Eastern. I have till 3:11. All right. So first things first, Jeanette heard me, and thank you, Jeanette, for the introduction. And I haven't talked to you in a long time, so I felt like, oh, there's her sweet voice again. But I know you're working hard, and so have I been, just on different projects and things. So I want to make sure I can see everyone's questions and comments and everything coming through in the room. So why don't you tell me if this is your first toast to traders, type a number 1 for me. That way, if I see a bunch of ones flying, I know my question box is working. And in the meantime, I can get everyone ready to dive into the way I use momentum, which interestingly enough, I premiered sort of to the world about 2 years ago here in the TradeThirsty room. So it's kind of nice. I guess it's my 2-year anniversary almost of being part of this team. But today, what we're going to talk about, as my slide says, is not your mama's momentum. All right. So we don't have a lot of first timers here, but I will welcome those of you who are. Actually, I can't see your first names. I just see email addresses or something, so that's okay. How about this? How many of you have used momentum indicators? Your RSI, your MACD, stochastics, just type in M for momentum. That way I know who's familiar, and even if you aren't, we're gonna dive deep in, and I'm gonna show you how to take an indicator that's already in platforms you use, whether it's TradeStation, Thinkorswim, anything else, and make the most of it, all right? Because we are in a very volatile market environment. I don't think I need to tell you that twice. May was not fun, but we're in June now, and we can take this information and make the most of it. So before we get into all that, as my colleagues today probably did as well, I've got to remind you, trading and investing can be extremely risky business, and it's your responsibility to evaluate any information, opinion, advice, or other content contained in this session. And what that means is what I'm going to show you is really simple but really effective. The thing is, you need to practice with it and master it first, then take it to your hard-earned dollars in your account, all right? So paper trade, use a simulator, whatever it is, get comfortable before you trade with any of your account, because things may seem easy at first, but then you might run into little challenges of your own, and you want to make sure you're comfortable, okay? So with that, let's go ahead and get started. And first, I'm going to just explain who I am for those of you who are new, because I think it's good to know who your teacher is, especially in a day like this when you have so many great ones to pick from. And so this is me, and that little pretty face Jeanette was talking about. And I learned about trading from my dad when I was a teenager, right? So very early introduction of the charts. But I went to college, Indiana, go Hoosiers, studied finance, and I thought I'd see all this beautiful stuff, candlesticks and indicators, but I didn't see any of it. So I struck a deal with my dad that I'd move home, and he would teach me trading. So I came back to my home state of New York, and my dad gave me this bright orange colored book written by this man, W.D. Gann, and said, look, these things have been around since the early 1900s, but they still work. And so I started my education there. I also started looking at charts right away, right out of the gate. And the E-mini S&P 500 futures was the market my dad decided to train me on. That's like throwing his little daughter in with the lions, but it worked because I started staring at the charts, reading the book, doing that back and forth. And I eventually started to see these buy and sell opportunities come up on the screen. Next thing I realized was, hey, the more I take Gann's words and turn them into images, the more I'm able to find opportunities in the market. And so I did that and eventually started writing my own little newsletter called the Skinny on the Mini. Okay, it's like the lowdown, the key points of the E-mini, and sending those to my dad. And you'll see in here, I even referenced the indicator that I'm going to teach you today. Now, I shared these with my father, and I didn't know that he was using them for a few weeks and boosting his ES trading performance, letting winning trades run, cutting losses short. And so I thought, hey, I'm on to something. I've got an analytical side I need to explore. And I took it to Wall Street and got my CMT. And during my first job, people heard this wild story of mine, right? Saw charts first when she was 16, got a finance degree, didn't see any charts, came back and learned more about them, and did it all with Gann's work, which can be very complex. So a publisher approached me and said, hey, Gann's work, being that it's so complex, can you write a book that makes it easier for traders, gives them a start on it? And I said, sure. And my book first came out in 2012, and I'm actually working on the second edition now, which is why I've been kind of like a hermit most of May and June so far. But once you publish a book in this trading glorious world, suddenly your profile changes, right? It wasn't just an analyst on Wall Street. People wanted to see the concepts at work. The Skinny on the Mini was the best way to share it. And I included the way that I use momentum, and I tied that in with my Gann work as well. So life carried on. Eventually I left New York again because I got married. And this is the save the date from my wedding, which was years ago. It shows you a side of my personality, which is I love comic books, I love superheroes and all that kind of stuff. So this is the kind of save the date I had made. And my husband, pictured here in cartoon form, is from Wisconsin. Wisconsin's next to Minnesota. And we moved to Minnesota as part of his career path. Now I started working at an investment bank there as a technical analyst, and it was great, but I couldn't use any of my skinny in the mini research. I couldn't do anything on the side. So I go back to everyone who got it and said, hey guys, I gotta shut this down. And then they started telling me how sad they were to see it go because of the ways that I was using support and resistance, market timing, and momentum. So I thought, I gotta bring this back someday. And my husband and I moved a couple times, not really on purpose, just willing to take new opportunities. We're now in St. Louis, Missouri. But we did leave Minnesota and come back to New York, this time to Buffalo. So I had my taste of Western New York. And when we moved, I thought, hey, I'm just gonna get another analyst job, right? I am a technical analyst and that's what I'm gonna do. But about a week after we moved, my dad passed away. And it was really hard, obviously, in my family emotionally and all that stuff that goes with losing a parent too soon. But it also put me in a predicament with my career. I could not go back to a corporate desk job and then be there for my family the way I needed to. So the skinny and the mini, which interestingly enough was inspired by what my dad taught me, ended up being the first product I put in front of all my former subscribers and said, hey guys, how about we make this the first piece of my trading education adventure with you? And they said, yeah, sure. And they started investing in it. So just take a moment to process. People used to get this for free. They used to learn about everything I was doing for free when I had the time to do it, but then they were willing to invest in it. That's how valuable it was to them. And they demanded of me to not only put the research out, but teach the methods behind it. And that's the same time that, as Jeanette mentioned, I met her at a trade show and I had just had my website launch and she helped me take what's been in my head for now 17 years and start getting it out on slides and paper and all that good stuff. So it's been a great partnership and I'm very excited that we're 2 years in and still going. So that's what I want you to know about me as your instructor. We're gonna get into the content now, but to make sure I still have everyone with me, I know it's a long day with a lot going on, please type an S for me. S for skinny, S for story, just so I know you didn't fall asleep at your keyboard, okay? Come on, I need to see the S's flying on the screen. Yes, thank you. All right. So we've got 4 topics for today, and we're gonna start with RSI Power Zones basics. So right away, this tells you what aspect of momentum I'm looking at. Even if you've never heard of the RSI before, it's all good. We're gonna dive deep into it. Now to do this, I use the sport where my husband's superheroes live. He doesn't care about Marvel and DC, he cares about the NFL heroes, specifically the Green Bay Packers, having grown up 20 minutes outside that stadium. I think this little stock image looks a lot like Aaron Rodgers, so hey, works out. Now, the Green Bay Packers are on the field with any of their rivals. Let's say we've got the Chicago Bears, right? Historical rival. When these 2 teams are on the field, they are going for the same thing, just in opposite directions. And this relates directly to momentum, which you'll see in a moment. When the Packers have the ball, they have to get through the Bears defense to get to their end of the field. Okay? They got to get to the end zone. The zone is where things happen. Remember that. And if the Chicago Bears have the ball, they have to get through the Packers defense. Again, to the zone. Okay, nothing really happens of significance in the middle of the field. You have to get the ball into the zone to make any points happen. So let's take this football field, turn it on its head, and we're gonna take the 100 yards that depict the green space and stretch them out over the end zones. Drop it down on a subchart. Now you have the RSI, which is the relative strength index put out by Mr. Wells Wilder back in 1978, long time ago. And we have it on my baby, the ES, okay? But you're gonna see this indicator can work in any market in any time frame. Now, the relative strength index has some original parameters that limit its use more to trading ranges and then make it hard to deal with trend movements. But what we're gonna do is gonna adjust these settings to allow us to trade in any environment. But first, I need to make sure you know what the original settings are, which to keep and which to toss. The first of these is the amount of time that the calculation considers, okay? Every little dot of this gray line in the indicator is looking back 14 days. Why days? This is a daily chart. You can look up at the top. And we're going to keep that because if you mess with the 14 periods, then the RSI power zones approach will not work the way I'm teaching you, okay? This is so important that I need everyone who's in here to type a number 14 for me if this is your first time seeing RSI power zones, so that I know that you know you're not messing with the 14, a 1-4, okay? Now, there are a couple other settings that have to do with overbought, oversold, things you've heard about before, and we're gonna walk through those. And that starts with the overbought level, okay, 70 or above. And in this condition, the default indicator, for me it's TradeStation, turns red. Red is scary, right? Red is sell, red is run, red is, oh my God, the market's falling. And sell signals live there. It's not automatic, but that's where they originate. But let's look at the history of the ES, which is very similar to obviously the S&P and general market, going back some time here, back to January of last year. You see when we had that run up into the end of the month, it was highlighted as overbought almost the whole time. How do you know when the real high is coming in when the thing is showing as overbought nearly the whole time, right? It's a challenge. Then after we broke out from last spring, what happened when we came up to this level? Did we get the high? No, we just got a high. All right, so it was just a brief high and then we got the final run up. So this can be a challenge when you're in these strong moving environments. We had the same situation just recently into the May 1st high. We had an original high that came in with the overbought signal and then the high was really posted after that. So these are the challenges of 70 as your overbought reading. 30 as your oversold reading has similar challenges, okay? It can be really beneficial like it was in February of 2018, fantastic buy signal. I mean, who wouldn't want that, right? But then what about the two lows that came in last fall? After the September high, we had a low in October, then one towards the end of the month, and people started to get excited that maybe the markets were stabilizing, but they didn't. They just rallied back towards that 2800, 2850 area, and then boom. We got another great signal in December, but how would you tell the difference between these four? The original RSI doesn't give you that. So what we're going to do is remove this set of overbought, oversold, and replace it with something new, okay? So we're going to go back to the football zones. On the football zones, remember, I said nothing happens in the middle of the field. You got to get to your zone to make things happen. And when we turn that football field up like this, the Bears lived in this area, and they have to get down to the Packers defense to get to their zone. It's the same thing in the markets. Now we're not talking about the Chicago Bears, we're talking about the market bears. Okay, so we have our first educational only slide as a reference that when this slide is done, you might want to take a screenshot photo with your smartphone and have it as reference. And you could use this going forward. Now I'm going to teach you more around it, including a signal, so stick around, but I want you to have this as reference. The power zones consist of 4 different areas. The first of these is the bear resistance power zone. Just like the Chicago Bears, okay, in this field of the RSI from 0 to 100, we're expecting bear markets, downward markets to start when RSI is 55 to 65, or find resistance and stop at the 55 to 65 level, not all the way up at 70. And when they start moving down, those bear markets generally are going to find support from 20 to 30. Now that includes the original 30 level, but think of it this way, guys. Falling just onto 30 is like falling into a cement floor, okay? It doesn't give you a lot of give. It's just very black or white, and you don't know which of the lows is going to be the low. If you start observing 20 to 30, it gives you a whole zone, a whole cushion, like a mattress. Would you rather fall into a mattress or a cement floor, right? So this is the set of power zones that define bear movements, and we're going to have 2 more that define bull movements. So if you've got this, you've got these 2 sets of numbers down, and you understand bear resistance, bear support, go ahead and type a C for Chicago Bears for me. C for Bears, Chicago Bears, and then I'm going to show you the bull zones. Awesome. Actually, before we do that, I have some examples of these zones in action. So when we had consolidation back in 2018, notice the first clues that the market was not going to continue higher came with the RSI power zones, hanging out 55 to 65. In the decline from the fall highs, these were two instances where for my skinny and the mini subscribers, I kept them ready for a new market high, not for the market to actually climb to new levels, but to make a swing high that you could trade, okay? So these are just some examples of this indicator in action here. So I see a question, are the yard lines the bar close? So Timothy, we're not talking about where the RSI, or excuse me, where price closes, we're talking about where the RSI closes. So if RSI falls between 55 and 65, then you look at the corresponding bar, okay? That's how you register which zone you're in. Not based on price, but based on the RSI reading in the zones. Does that clear that up? All right, now let's look at the bull zones. The market bulls, they have their own two zones, and they live way up in 80 to 90 when they're in their full force, taking the market higher condition. Bull resistance power zone is 80 to 90. And the support zone is from 40 to 50. That's the platform at which you expect a bull market to get oversold. And that makes sense when you think about it, right? A strong bull market shouldn't come all the way down to 30. It should hang out at a higher level. And that's what this is representing. So now let's look at some examples of this same price action, which has a couple of bull markets in it, and see how the bull support and bull resistance power zones would have helped refine your trade analysis. Look at the breakout after the consolidation in early 2018. We had a pullback and it held with the RSI holding the bull support power zone. Had another pullback, RSI held the bull support power zone. You wouldn't have gotten that indication if you were waiting for 30. Along the way, we had an RSI hold at bull support power zone. Okay, so this allowed you to use this indicator to help you trade with the trend, not just deal with trading ranges. In the recent run-up into the May high, we had another indication. Now, there are going to be times when it doesn't come all the way back in the zone because the market's too strong and it's not allowing conditions to get that oversold. What we're going to look at here is how markets move through the zones, and then I'm going to teach you a signal that allows you to pull even more information out of this, all right? So before we dive into that, I want to make sure everyone has the basics. And this is the bull zone. So go ahead and type a B for bulls for me. B for bulls, and we're going to go into seeing the flow of this indicator on markets you're probably already very familiar with. All right. So we've covered RSI power zone basics. Now we go on to movement through the zones. So this sort of chapter of our session today, I'm going to move through with a pretty good pace because I just want you to get comfortable with the movement through the zones. As I mentioned, RSI power zones can be used for analysis and signals on any active market in any time frame. Take a look here. We've got stocks, we've got ETFs, we've got bonds, we've got different time frames, monthly, weekly, daily. These are just some of the examples, okay? So in order to kind of get a good sample for you here, let's start with commodities, one that you know very well, on a monthly chart. So we're talking about oil, light sweet crude to be specific. So ticker symbol, @CL on TradeStation. And we're going back a long time, right? Like 15 years here, more. And looking at oil on a monthly chart, if you had been looking at it on the RSI power zones, what would you have seen? Now, the indicator at the bottom is changed. It's no longer the standard RSI. Now, we still have the 14-period setting, and we have these individual zones. We have the two lower red lines that are the bear support power zone. Two lower green lines are the bull support power zone. Two upper red lines are the bear resistance power zone, and the two upper green lines are the bull resistance power zone. So they alternate, okay? So a bull market should live between the two green zones for most of its duration, and a bear market should live between the two red zones. We're going to see that in action here. Some of you who, if you were trading 10 years ago, may remember this run up in oil. It was wild, okay? I was an analyst on Wall Street when this happened, and I remember it was really fast and crazy. But notice on the price, while we had this strong advance higher that maybe nobody saw coming or you couldn't assess the extent of it, Using the RSI power zones, you could see a move from the bull support to the bull resistance. Okay, paints the picture that momentum is staying with the trend because we have upward prices and respecting of the bull zones. Now, everything fell out of bed very quickly as well. And on a weekly or a daily chart, you would have seen the early signs of this. But looking back after the fall on the monthly chart, see how we went from a lower low in price, okay, beneath this past swing low from 2007, and the RSI power zones fell to the bear support power zone. They didn't come and hang out at the bull support and resume higher. They went all the way down to the bear support power zone. That was a clue that this might be a situation where the uptrend is not going to resume anytime soon. And that ended up being the case. Not only did an uptrend not resume, we ended up in this massive sideways range that was probably very frustrating for traders. But if you kept one eye on that monthly oil chart, it kept reminding you that the bear resistance zone is capping every single one of these upward attempts. So after that initial fall, the bears were still in power. They just weren't exerting their force yet. Then they did. And when it fell, here's a great example of not wanting to fall on the cement floor, instead wanting to fall on a cushion. See how price first went below 30? And if you follow the traditional approach, you would have been like, oh my God, that's it. I just called the low in oil. I'm brilliant. Well, if you only went off that, you wouldn't have had your eye on 20 and realized the potential for even further oversold conditions. So you might have been caught up in that final leg lower. Okay, so looking at this whole zone really helps. Now keep in mind, RSI can move from 0 to 100. It's not limited even to the power zones. But by using the power zones, you're using more of the 0 to 100 landscape. Now, this price action reflects into the end of Q1 this year. Okay, it's a monthly chart. But notice that after holding the bear support power zone, there was another sideways range and then a very steady rally into last summer. But where did that rally end? RSI at the bear resistance power zone on the monthly chart. Okay. Again, this is reflecting through March 31st, but this is a walkthrough that helps you get familiar with how this indicator moves. Let's do another one, okay? Let's take another market that you're probably very familiar with, an ETF on a weekly chart. Again, we're doing this to get you comfortable with the flow of the indicator. Then I'm going to teach you a signal on it, okay? Let's take a look at this SPY chart on a weekly time frame. So every candle represents 1 week of price action all the way back to 2016. Again, the same zones that I just depicted. Okay, this is what the indicator looks like no matter what market or what time frame. And yes, the values, the zones stay the same, so does the 14. So now we're looking at 14 weeks back every time we plot the RSI instead of 14 months like we did on oil. So there was this consolidation or this capping of price action, and then we saw a burst higher. And after that break higher, there was a pullback to this red candle right here. That pullback on price on the weekly chart coincided with RSI holding the bull support power zone, an early clue that this might be a substantial pullback that actually holds, and we do see continuation higher. Well, then we had the big run up into the 2018 price action. Here's what it looked like here, strong advance higher. And look, on the weekly chart of RSI power zones, you move from the bull support to the bull resistance. Same story as that first big run up on the oil chart. Now here's something crazy on the weekly chart, because price moved so quickly from the end of January to February and then rallied back up. Within just a few bars, we had a sharp correction lower, and the RSI moved from bull resistance to bull support. So still respecting the green zones, but doing it really, really quickly. That was a clue to me that while we had a very sharp fall into February, that it was probably going to hold, and that was going to be the low that we were going to see for a while. That ended up being the case. We turned into a consolidation situation, right? Sideways range, lower high, higher low in price, but RSI still just held the bull support power zone of the weekly chart. So whether you're looking at the E-mini or the big S&P futures or the SPY, right? They're all tied to the same underlying stocks in the S&P. These were clues that could keep you with the right side of the market. Then there was this breakout higher into the fall. And that's where something funny happened that we're going to investigate further as a signal. You know, we get a new price high, but RSI didn't make a new price high. It capped at the bear resistance zone, or very close to it. And then since then, we fell into December and then rallied. Again, this chart is through the end of Q1, so you can see that we had that return higher off of that low. And what happened here? We had a substantial price move lower off the fall highs, and we got a move from the bear resistance to the bear support zone. Okay, all of this can be studied within a couple different time frames so that you can actually take action on it. I'm just starting with bigger time frames to get you guys comfortable with the flow of the indicator. So if you guys are seeing how the RSI power zones move and how you can kind of pull more information out of it than the standard RSI, it's type of 1 for me, and we're going to move on. All right. So now we get into the nitty-gritty, the details. How do you use RSI power zones to identify trade setups? So this slide is going to be another one of those purely educational slides at the end that's good for reference, okay? So I'm letting you know, get ready to take a screenshot or photo at the end, and then keep it for your reference because you took the time to be here. Step 1, review the chart and assess the price trend. Wait, you might be thinking, Hima, you've been talking about momentum endlessly. Now you're coming back to price. What's going on? Well, price is king, guys. Price rules everything. Momentum's derived from price. So the first step in assessing your market of choice for any RSI setup is to actually know what the price trend is first so that you have the advantage of trading with the trend. Now your choices are not just up or down. You might recognize an uptrend, a downtrend, or a sideways market situation. All three are viable options. It's okay if you fall even in the sideways category. After you assess the price trend, then you evaluate the RSI power zones reading. And in order to do that, what you're doing is looking at the RSI value relative to the 4 power zones. Either it is within one of the zones or it's not. It is 100% objective. Those values I gave you, they don't change. They don't adjust for different markets. They don't adjust for different time frames, okay? So this is a very objective process. Either you're in a particular zone or you're not in any zone. Once you do that, you go to the next step. And to make this evaluation easier, a preset indicator with the zones drawn out helps. Okay, when I was an analyst on desks and I couldn't really have that much control over my trading charting software, I had to go and draw those 8 lines in on every fresh chart. Not fun. If you have it at the indicator preset, then you don't have to spend your time worrying about where you recognize it. It instantly pops out to you. Lastly, you want to determine the presence of an entry signal between price and momentum. Now, there are a variety of these, and we're going to walk through a specific one, okay? So if you have the RSI power zones basics, the parameters, and the understanding, you have understood now with a couple examples how price and momentum move through the zones. Now you can dive in and apply a signal. So to apply the signal, we're going to add even more variety to the examples I'm showing you here. And we're going to look at a stock chart on a daily time frame, something you probably all have a lot of familiarity with or trade yourselves. Now, I used to, for this type of presentation, look at the recent market action and just bring in signals I saw. Then I started doing really deep dive research for my book. And in doing that, I went back and I looked at all of my market calls for 2018, okay, because I started working on the manuscript really heartily earlier this year. And when I did that, I found that in the weekly videos that I put out to the Hima Reddy family, there were many market calls I made using the exact signal I'm about to teach you that actually panned out, that could have been acted upon, of course, with proper risk reward and money management. So I'm not showing you an example from yesterday or this week because that doesn't give you any clue as to how this actually works out over time. I'm showing you very detailed examples on slides, and then I'll show you more in TradeStation, calls I actually made in the market and how they would have panned out, all right? So let's start with Netflix. So Netflix, I wrote about in April 2018, and I identified the exact signal I'm going to show you here. Exactly this, all right? So let's walk through those same 3 steps that we just did. Review the chart and assess the price trend. Well, there's a couple ways to assess price trend. One of the easier ways people use is moving averages. I think that that's good as a backup, but I think the more pure price action approach is ideal. So in order to know what direction price is headed, you observe the highs and the lows of the recent history. So let's all take our eyes back as far as I've given you on this chart and see what we've got. We've got a high here. That's clear, right? There's lower highs around it. And that all kind of broke up in a choppy fashion, and then there was this sort of ultimate low. Then price broke above the high in the middle. And then we had this next higher high. Price pulled back, closed some of this gap. Then price broke higher again and formed this high. Now currently, or at least as of the time I'm showing you on the chart, there's a potential low forming, but we don't know yet. So is this an uptrend, downtrend, or sideways? Well, it's a series of higher highs and higher lows, so it's an uptrend in price, but a corrective pullback is in motion. Okay. We're not in the upswing right now, but we have no reason to think that it will be ending anytime soon, because while the most recent higher low stays intact, this is an uptrend. Okay. So after we evaluate the price trend, we look at the RSI power zones reading. Now take your eyes down here, guys. We're looking at the very end of this line, okay? You can see, even without having the exact number, because this number reflects what I'm gonna reveal to you in the chart. Right here, you can see, okay, we are in between the 2 lower green lines. The 2 lower green lines, Hima said, 40 to 50, and that's the bull support power zone. So there you've got it. We're holding the bull support power zone with price in an uptrend and a corrective pullback in motion. So already this should get you thinking, okay, a long entry is probably a better bet than a short entry if I want to trade with what the trend is suggesting is going to persist. Now, step 3 is to actually go in and identify that signal, determine the presence of an entry signal between price and momentum. So what I've just highlighted for you here is a bar to bar signal, okay? Very, very close times of occurrence. But what we have here is that the first yellow highlight to this candle, this large bodied red candle, has an RSI value. Then the next green candle, this larger bodied green one, has a higher RSI value. So what we have is a situation where we have price going lower, but RSI going higher on the reading that corresponds to the bar. Well, that's weird, right? Because price and momentum, given that momentum derived from price, they generally move together. But that's the thing, guys, when they have a disconnect and they don't move together, that's when you could pounce and take advantage of potential trade opportunity. So here's what this looks like on just a general illustration of price movement. Okay, this could be a downtrend or this could be a price correction lower like we were talking about, but we have a situation of a lower low in price, higher low in the RSI. That's what's called a bullish divergence. Now, a divergence signal is not unique to the power zones. Okay, divergence signals are present on a variety of indicators. You may have heard about them earlier today. However, when you apply the divergence signal to the power zones, then you have much more clear focus and strategy on how to deal with the price action in front of you. So we're going to see an example of that here. So if you guys follow me, you've got this divergence concept, go ahead and type a D for divergence for me, D for divergence. Because this is this signal that is the root in terms of taking advantage of new price moves within existing trends or capturing major price turns. All right, great. Appreciate the participation. So let's go back to our Netflix chart, which I put out in front of the world April 2018, and I said this. I painted this signal out. So we have a bullish divergence in the bull support power zone. And in this situation, that sets you up for, sticking back with the football terminology, an offensive move where you can go for it. You can say, all right, I'm going to go for a long entry here, trade with the trend. Okay, you're not protecting anything. You're going to establish a position. Now, the nuances of how you get in that position come later, but I want you to see, I lined this up for folks, and then this is the price action that unfolded. This actually happened already, right? So we had a move from the low on April 4, 2018 at 271.22 to the high June 21st, 2018 of 423.21. There wasn't just one chance to get on it, there were several, but ultimately this created a price move of $151.99. And remember, that's off a stock that was originally priced at 270 when it all started. So this is nearly a 50% increase in price, actually more than that, just off recognizing this signal. But the key is, if you were waiting for this on traditional RSI, you wouldn't have gotten it because you would have been waiting for price to go down and RSI to go below 30. There was no 30 to go down to when you're in a bull market. It was the 40 to 50. So you guys see the value of being able to apply the power zones and combine it with a signal. Go ahead and type an X for me, X for Netflix. Okay. Again, I'm showing you things that I actually walked through and painted for people when they were happening. And I have more, but I'm going to walk in detail through another example, and then we're going to go to live charts. So look, all these gray check marks show you all the different combinations we've been covering. Now let's do another one. Let's do FX, still daily though, okay? So now let's go do a look at Swiss franc, which I, again, highlighted this signal. This one was in March of 2018. And now that it's June of 2019, it's time to do research on everything I've made a call on since December. That'll be interesting. But for what I did reflect on, this was one that was a similar signal to what we just walked through, but a different placement. That's where the positioning of the signal versus the zone becomes the key factor. I see a question here. Do your power zones work well on 5 minute, 2 minute, 3 minute? Yep, we can go to an intraday example. So everybody who wants to see this on other markets and time frames, don't type it in yet. In your head, have ready. And when you type your ticker to me, at that time, also put in the time frame you want to see. And we'll see how many we can get through in my slot before I believe the next speaker's Ron comes up, okay? I want to make sure I respect Jeanette's timeline here. But let's go through this example. I'm going to go at a little faster clip because now you guys are getting it. And we're going to do the same 3 steps. Review the chart and assess the price trend. Okay, how much price action did I give you? Well, way back here. All right, so we ran up into this high. Had another low. So far, this would have looked like maybe an uptrend, right? Because you would have had these smaller moves within it. This low, or whatever was before it, this high, this low, this high, and then another low. And it was respecting the original low. But then, price made a lower high. And then a lower low, lower high, lower low, lower high, lower low. Now this lower low may not be the low of the current move down, but it's an interim low. It's one we can recognize. So this puts us in a situation where we clearly were in a downtrend when this price action was noted, okay? Downtrend in price. And I'm a big fan of trading with the trend. So this means that if you're going to have any sort of setup, you're going to be looking to sell. Either sell to exit along or sell to go short. Okay, that's the condition you're in right now. Evaluate the RSI power zones reading. Move from bear resistance power zone to bear support power zone. All right, so we see that there is a respecting of the zones, which I'm going to go ahead and highlight for you here. This lower high form with RSI in the bear resistance power zone, and in this whole journey down, we've come down to the bear support power zone. Okay, respecting the bear zones. No changes yet. But in those first 2 steps, we haven't looked at signals yet, right? This is why it's not as simple as just trading back and forth between the zones, because you need to be able to recognize if opportunities are emerging that are suggesting the trend might be doing something different. Determine the presence of an entry signal between price and momentum. All right, you might recognize this. So you might be like, all right, Hima, you already went through this, right? We have a lower low in price. We have a higher low in the RSI. Yes, that's a bullish divergence, just like on that other illustration I gave you. But what's different this time, guys? This bullish divergence is not in the bull support power zone, which is an offensive, let's go buying phase. This is a bullish divergence in the bear support power zone. that sets you up for a defensive move. Okay, so we know that we're in a downtrend, but now we need to defend our positions, meaning if you have any shorts, this signal should get you close to protecting your position, meaning getting an exit long to get out of that short before price trend turns higher, and keep you on guard for the possibility of a trend change higher or sideways. So essentially this means stop selling. Doesn't mean go long yet, it just means stop selling, okay? Here's what followed. And what followed was an extended recovery that broke above the most recent lower high. That's the first clue that the downtrend may be over, and an active signal now to exit your short positions. So if you had any short positions along the way, let's say you had one from here, or even if you got short here, okay? This price action of breaking above this high is your first clue that, hey, this whole down move might be changing, and I don't want to consider selling again just yet. Here, you would want to see further confirmation that the downtrend would be resumed before taking any further short positions. Or if you want to now assess and see, hey, let's see if the trend has changed in the upside and what I can do to take advantage of that, that would have gotten you in a mode to be ready for this move. Where could you have gotten in here? The nuances of it, again, beyond the scope of a 1-hour presentation here. But there are lots of opportunities. After breaking above this high, you had this dip, you had this dip, you had this dip, you had this dip, you had this dip. Okay, I'm not showing you a parabolic move and saying, oh, look at all the money you could have made. I'm showing you a move that became parabolic later, but during half the life of the move, there were chances to get in. And they were all after observing a signal that got you ready to stop selling and start possibly buying. So what did this move equate to? Well, it's actually your fellow presenter today, or my fellow presenter, Silas, who was on earlier today, who, when I did the math on this, because I haven't traded FX in a while, I was like, Silas, is this right? Is this really true? He's like, yeah. He's like, I wish I was looking at your Swiss franc chart when you called this trade, because the low to the high was the following size of the move, okay? Or was the following move in size. The low, February 16th, 2018, 0.9186. Okay, I'm not saying you would have been gone long there. I'm showing the whole size of the move. And when did it stop? May 7th, 2018, 1.0050. Okay, when you do all your fun FX math, your pips and everything else, that was $8,600 in a move that would have been on one contract, just off using RSI power zones and observing one signal to get you ready for it. Now you're looking and saying, well, Hima, you're showing us the size of the move, but you're saying we wouldn't have gotten in at the bottom. Well, what if you got in for half of it and you got $4,300? Not too bad. What if you got in even earlier? What if you were really on the money and you got in on this pullback? You would have gotten about 75% of the move. See, I'm not showing you things that I'm saying are going to have you in at the low and out at the high like magic. But I'm showing you where you can find opportunities as they're emerging as early as possible and then get the bulk of the move. The consistent trader is making money on the bulk of the move, not the top tick and the bottom tick. You guys see this? You see the value? Please type an F for me, F for FX, if you see the value in this. F for FX, F for franc. Okay, I'm walking through this slowly to explain the signal, the zones, and make sure you can go recreate this in your own practice after you stick around for this whole awesome day of indicators. And then you let your brain rest tonight, and maybe you're back on your charts tomorrow. All right, love it. Okay, so I see my time here, I'm gonna be cognizant of that. I will have time to go back to TradeStation for you, but first, I wanna make sure I address anybody who's really ready to dive in now and proceed, okay? This is like me reading a comic book, and yes, I cannot believe I have not seen Endgame yet. My husband's not a huge fan of these movies, so I have to wait till I coordinate with friends, or maybe I'll just go by myself, but I digress. If you're ready for more, the way I am when I'm nose deep in a comic book like this, then let me tell you about the RSI Power Zones workshop, which is where you can master RSI Power Zones. This is the first workshop I created around this indicator. Again, it premiered right here at Toasted Traders about 2 years ago, and we're opening doors. Now, what does this include? Pretty straightforward. There's a bunch of stuff you get right away, instant access, and then one little piece you have to wait for, okay? First instant access item is the actual education around it. It's a video tutorial, couple hours long. You can watch it on demand anytime you'd like, and it covers my favorite RSI pattern setups, including a setup that you can calculate price targets with using momentum. Very cool stuff. The best candlesticks patterns for trading RSI power zones. Remember that CMT exam I took? I used to write candlestick questions and essays, and I had to study candles a lot, let's put it that way. I have whittled down to about 5 that I think are the best to use. Trading bar chart reversal signals. Does anybody even talk about bar charts anymore? I do, because I'm a GAN girl. And GAN, all of the charts that I study were all bar charts. So there's some techniques where actually looking at a bar chart can help you see price floors and resistance that tie in with your RSI power zone study. So these are just some of the topics, and it's all laid out in a video tutorial, a few hours long. It's totally ingestible, and you can keep watching it to get more and more out of it. Now, the next instant access item, what I call cheat sheets. Okay, so take yourself back to, high school, maybe middle school. For me, it was always in science, where I would learn something on like Monday, and then maybe we'd have a pop quiz by Friday. And if my teacher was nice, he would let us have a half sheet of paper where we could write in formulas or references or diagrams. Okay, so that's what I'm giving you here, because every day you go to trade the markets, it's a little exam for yourself, and I don't want you to sweat and stress about it. I want you to have your teachers there with you. And so I do it by giving you a cheat sheet. And what this does is outline the key elements from the video education that you can revisit quickly and have as a reference right when you're trading or doing analysis. For example, you've learned all about the divergence, the bullish one. Of course, there's a bearish counterpart. I teach it in the course. You've learned about the 4 zones, and this is the cheat sheet for the power zones and the divergence relationships. Now, I gave you a very simple defense-offense explanation, but there's more detailed strategy to it, and that's detailed in the cheat sheets. Okay, so you get this complete cheat sheet and more. The other instant access item is the indicator itself. Now, when I first premiered this, I had TradeStation, literally just TradeStation, and the rest of this slide was blank. I have built out this arsenal for you, and if I build any more indicators on any more platforms, you will automatically be grandfathered in to get them, no additional investment. This is a no limit download, guys, okay? You can download it for any number of platforms. Let's say you use both TradeStation and Thinkorswim. You can use it on multiple machines. You can do it as many times as you need. If you get a new computer, you don't have to pay anything else. You just come back into your portal and download the indicators, right? So we have all the download files for the platforms you see here, which I'll rattle off really quick because I know sometimes you need to listen to really know if yours is in there. TradeStation, Thinkorswim, NinjaTrader 7 and 8, Sierra Chart, Trade Navigator, eSignal, Ensign, MetaTrader 4, MetaTrader 5, and TradingView, okay? And what this does is plot the RSI power zones indicator and have you not have to worry about figuring out what zone it's in. You can see it right then and there. So all of this together is the instant access material. Then you gotta wait a few weeks, but for good reason, because we're gonna have a live bonus session. It's already on my calendar, Tuesday, July 9th at 12 noon Eastern. It's an hour just like this. I use GoToWebinar as well. And you can submit your questions in advance. So you have plenty of time to dive into all the course content. In fact, you have over a month if you sign up today. And you can submit those to me and I will prepare. And you can also give me your market tickers and I can do analysis in advance and come ready to review them. Now, if you're not able to attend at noon or you have to show up late or leave early, don't worry. The session gets recorded and it will be put into your course portal for lifetime access. Okay, so as long as you have the product, you're also going to have your access to your bonus session. So 3 instant items and 1 you got to wait a few weeks for, but for good reason. So far, everything you've heard about RSI power zones has been from me. Let me share what some of my students have experienced. In just a few months, Hima's RSI indicator has become the standard on all of my charts, said Rob C. in Alberta, Canada. I installed the RSI power zones indicator and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves, said David in Washington. My first month using RSI power zones was also my best trading month so far, says Susie from Colorado. Now, what I have for you guys today is the following, right? When we look at all these elements, the retail value of the on-demand video tutorial and cheat sheets is $19.97. The live Q&A bonus session is $2.97. And the RSI power zones indicator retail value is $4.97. Add that all up, that's close to $3,000. I like to give 5 to 10 times of the value of what I put in front of you, okay? Because I want you to recoup it very quickly in your trades. So you can sign up for this for just $197. That's a one-time investment, and you can sign up at himareddy.com/mama. It's M-A-M-A, as in not your mama's momentum. All right, so a couple housekeeping notes on this, and then we're gonna go look at some live chart analysis. I like to reward action takers, and I want you to have as much time as possible to study. So the doors are gonna be open till 10 p.m. That's tonight, June 8th, 10 p.m. Now, why do you need this workshop? Detailed strategies on how to best trade with this indicator, okay? It gives you the full approach. Prevents you from reinventing the wheel and saves you time and money in the long haul, right? I used to go to trade shows and online webinars and everything just like you guys. I wasn't born knowing about charts. I mean, 16 years old is pretty close, but I didn't have all this knowledge to start. And when I went to learn about things, I found that when something resonated with me, whether it was the indicator or the technique or the teacher or any combination of that, when I invested in it and studied what they had, it paid off really quick. When I tried to go and figure it out for myself, it usually was a struggle, right? So again, doors close at 10 p.m. Eastern. And what will happen when you sign up, and again, I share this because I was in your shoes. I didn't know if I was signed up properly for a course and, you know, if I had everything I needed to get started. So when you sign up, you'll get an email that says your access RSI Power Zones workshop. It'll say support at himareddy.com. Then you'll get a receipt from Seller Wealth, that's my company. And both of these will let you know that you're hooked in and ready to go. So now it's up to you guys. I want you guys to drop your tickers in, give me your markets. I have a 9-minute window to totally analyze a way for you and show you examples. So go ahead and drop in your ticker request. And if you have a different time frame than daily, put it on the tail end of your ticker. And yeah, sure, I can go ahead and drop this in the chat box if the team hasn't already. All right, team's got it in there for me, himareddy.com/mama. And what we're gonna do is go ahead and go back to the charts. That's me as a superhero. And I'm gonna bring up my trade station. So everybody just give me 2 seconds. I'm gonna pause my screen, make sure I have the right windows ready for you. You don't see my super secret GAN analysis window. Just kidding, I don't really have that. All right, so I see tickers coming in and we will fly through. All right, so let's go as fast as I can with as much value as I can. All right, I'm on the Euro chart if anyone's asking about it. Nope, not yet. So let's go to ticker FAST. And here we're on a daily chart, okay? So you'll see I have a 200-day exponential moving average. I'm a big fan of the exponential. It's a little bit faster and more sensitive, right, than the simple 200-day MA that everyone on CNBC and whatnot's looking at. This is part of a triple moving average filter I use, and I teach the other two averages in the course along with how I use them to assess trend. So let's look at this market right here. All right, step one, review the price trend. If I squish it up, okay, we could go to a weekly, but I wanna look at as many charts as we can today. We're in an uptrend that has pulled back and now we're above. So on a big picture trend, we're above the December low and now we're starting to turn higher, okay? Because we also came back to this old high. Now, RSI power zones are lifting from the bear support power zone. Look at the last times it was there. All opportunities to go long. So my advice would be to not just go long just because the RSI power zones lift off, okay? Momentum gives you a hint. Price is where you take action. I would look at this set of lower highs here in this particular stock and make sure you can get a closing daily break above these levels before you go ahead and take any long action, right? Now, let's look at ULTA. Okay, if I see a signal like the one I just taught you, I'll mention it, but right here, we've got a very choppy corrective pullback of this bigger picture uptrend. Now it's hanging out below this latest lower high. See, RSI came up to the bull resistance power zone, very close, and started petering out. And all price did was come back to the bull support power zone. So all this mess in price coincided with RSI going from overbought to oversold relative to the bull and bull support and bull resistance zones, okay? So right now, no new action. I wouldn't take a long just yet until we get above these highs. I am very wait and see right now with stocks that are showing this action because while we did have a strong couple of days, especially when you look at the ES, I don't think this show is over. I don't think we have a definitive clear chart picture to suggest we're going up to new highs just yet. All right, let's mix it up with some intraday charts. So I see someone asking for Roku on a 15-minute. So for that, I go to my chart that has no moving averages, so I can keep it all clear and clean. I don't use moving averages on intraday charts. You can, but I don't. And on a 15-minute chart, which before we do that, all right, this way everyone has perspective. Okay, this stock has been climbing higher. It's now surpassing the past weekly highs. Room to get up to the bull resistance power zone still. And now let's zoom down to a 15-minute chart. 15-minute chart, we had a bullish divergence down here on June 3rd. Now it was in no man's land. That's the space between the zones. So the space between the zones is this right here, and this little sliver in the middle. It doesn't mean you can't take signals there. It just means when you're starting out with these techniques, I recommend sticking to signals that are clearly in the zones. You get more bang for your buck, all right? So we had a bullish divergence down here, lower low in price, higher low in the RSI, and rocketed higher. RSI came to the bull resistance power zone. Notice RSI pulled back to the bull support power zone, and all price did was slow its pace. It didn't even correct lower. So this just showed you that there was an overbought condition and it needed to wear itself off. Now on 15-minute chart, we're back to bull support power zone and hanging out. So if we get a resumption on 15-minute chart above this high, that might be a clue that we move higher. Okay. All right, the tickers are flying and I'm looking at my time. All right, Tesla, that's a popular one, so I will definitely do that. Tesla has been one of those stocks that every time somebody's asked me about it over the past number of months, I've been like, just please put your money somewhere else, okay? No offense to Tesla, no offense to their products, their team, any of that. It just was a big whole party of nothing, just going sideways. Now, we came down to the depths of the bear support power zone. RSI value 2046, then bounced. See, that was pretty handy use of the bear support power zone. But is this bounce the beginning of a new recovery rally that's going to take Tesla, way back higher? I don't particularly think so. I think the next key resistance to watch are these old lows. Okay, so this is sort of basic technical analysis GAN approach, old lows, old highs. So about $230 is important resistance on Tesla. Now I'm going to have a little crystal ball moment here. I don't have a crystal ball. Okay, so do not trade what I'm about to tell you, but I have a major spidey sense, if you will, when it comes to RSI power zones and price action. So what I think is going to happen, is that if we break out above these 2 days that have been forming, then we may recover towards this high, and RSI will probably recover, but hang out in that bear resistance power zone. If that happens and you start to see price, Tesla, form a high near $230 with RSI between 55 and 65, I would think we're heading down to 150. Okay? A crystal ball is in the shop. That's just me giving you my spidey senses. Do not trade it unless it happens. Only trade it with money you can afford to lose. I get very nervous about saying things like that because it's as if I'm painting it as if I know what's going to happen. And very oftentimes it comes to pass, but I can't know when it's going to be hit or not. Okay. All right. I see a couple more questions here. INTU 5 minutes. Sure. Let's do another intraday. And then I have 2 minutes left, so I want to make sure I show you guys the details on this again. Did you guys follow that we've got the video tutorial, we've got the cheat sheets, we've got the indicator, and then you have July 9th, a review session with me, okay? So let's look at this on the intraday 5-minute chart. And those details are listed out at the registration page, himareddy.com/mama. 5-minute chart. Well, first I need perspective. Where is this thing on a daily? Okay, big sideways range. Worked itself off from overbought conditions to oversold for a bull market. Now is starting to show potential resume higher, especially with the latest low, this big red candle holding the bull support power zone. So I think there's a good chance that Intuit goes back to its recent daily chart high, like the all-time high. But first you might have some extended correction lower here, and then a resumption higher. On the 5-minute chart, we're just super oversold, but no bullish divergence. So room to correct lower, and I would look at this old high as the support to watch, okay? All right, that's my time, guys. I wanna make sure I hand it back to the folks who are supposed to get the mic next. And so I wanna thank you for spending this hour with me on this Saturday Toast to Traders Got Indicators event. I hope it's been helpful to you. And before Jeanette takes your poll of me, which is fine, I won't see, I would love to know if you found this valuable, this 1 hour with me, RSI power zones, and type a V for value. And that way I know if I did my job here today. Those of you who decide to sign up, I will see you in the review session on July 9th. Until then, have a great rest of June. Good luck out there. Happy July 4th and all that. I'll see you July 9th.